I think the Chinese first quarter numbers, to be honest, I think the headlines numbers probably mask a fair bit. I think a lot of the growth really came up front loaded in January and February. I think a lot of the high frequency data which we get for March, and you talked about some of that earlier in the program, including about retail sales, auto sales, property sales. A lot of that data, including even for exports, is clearly suggesting that the lockdowns, which have really been more of a March issue and probably more even towards the end of March as Shanghai kind of went into lockdown, is bearing down on the economy a lot. So I would think it was a case of January, February being stronger than expected, but clearly slowing down into end March. It's interesting. There has been a lot of talk from the Chinese authorities in the last few days about giving more support to the economy. But it's also true that they seem fairly cautious about a large-scale, broad-based easing, and instead opting still for more selective easing on the credit front. And I would imagine having more fiscal spending to support the economy. Their annual target, to our mind, does look pretty aggressive at 5.5%, but to achieve that would almost certainly require, to our mind, a lot more aggressive policy stimulus than they have so far been willing to show.
Well, that's interesting. So you're a little bit skeptical about the support for this quarter. Let me ask you then about the policy uncertainty. I mean, you look at a company like Bilibili, it's down over 10% this morning because of this new ruling about streaming video games that the Chinese government doesn't approve of. We've seen other pronouncements about e-commerce platforms and whether they've been profiteering. I asked the previous guest the same question, but is the tech sector still somewhere that you can invest and feel comfortable that you're going to get your money back in, given the unpredictability around policy pronouncements?
So I think last 12 to 18 months have shown that there are sort of parallel tracks on policy, if you might, in China, where there is clearly an attempt to reconfigure, re-engineer the economy to sort of longer-term objectives around deleveraging, around changing the parameters of some of the industry, which is where a lot of the regulations, whether it is with respect to technology, education and so forth, we have seen. I think those will continue in parallel with sort of efforts to, if you might, stimulate and form a base around the macroeconomy as such. So I think we will still continue to see a little bit more of that regulatory uncertainty, and that will bear down or continue to till we see a macro shift upwards in the trajectory for the economy over the next few months.
Samir, how do you think about the impact on other Asian economies from what's happening in China from a COVID and a policy perspective?
So China is obviously more important to Asia than it is potentially to other parts of emerging market economies, and very largely the relationship goes mostly because of supply chains. China is a very important part of the regional supply chain, and also other sort of economic interdependencies like tourism, for example. Chinese tourism has been a very key part for a lot of the regional economies in Asia. So I think China's zero COVID strategy and what that risks in terms of potentially deeper or more frequent lockdowns in the economy still pose that additional risk to the rest of the region, which is already under pressure from sort of growth slowdown in the developed world. It's already under pressure from faster monetary tightening in global conditions. So this is an extra whammy, if you might, for the region.
How long do you think this dynamic, what's happening in China, is going to persist for? You speak to a lot of China experts, and they point to the 20th National Congress of the Chinese Communist Party that's due to happen toward the end of the year. Is this zero COVID policy and these lockdowns, is this what's going to, what the rest of the year is essentially going to look like?
So I think there's already nuance shifts which have happened in China's sort of even its definition of zero COVID, if you might, has moved to a more dynamic clearing strategy, as it calls it, which effectively tries to limit the cases to certain parts of the city and kind of try and move on to opening up and not kind of keep sustained lockdowns. I think we need to see over the next few months. It's only now with Shanghai and before that Jilin that we've seen a real big test of this strategy. How that kind of plays out over the next few months. My guess would be that they would have to sort of make small shifts towards, if not abandoning zero COVID, but certainly making a more sort of nuanced look at not waiting for cases to go down to necessarily zero before they sort of open up economic activity more.